Taxation of dividend income in the hands of the recipient. Section 115 BBD and Section 10 subsection 34. Now, what happened is that if you look at it the way it works today, if there is an Indian company which declares dividend in excess of 10 lakh, or for that matter any amount, to a resident, individual, a firm or an HUF, the company pays a dividend distribution tax, and this dividend is exempt from tax in the hands of the recipient. What the new section proposes is, it tries to make a distinction between dividend which is greater than 10 lakh and dividend which is less than 10 lakh. And again, there's a distinction between a resident, individual, firm or HUF, or a non-resident who's falling under these categories. What it proposes is that in both these cases, right, wherever an Indian company declares dividend, the Indian company will have to pay dividend distribution tax. This position remains unchanged. But if the Indian company pays dividend to a resident individual or a firm or an HUF which is more than 10 lakh, then the recipient has to pay 10% tax. Which means that if the dividend is not greater than 10 lakh, then there is no tax which is payable. Similarly, if the dividend is received by a non-resident individual, firm or an HUF, right, in those cases also the tax rate is 0%. Let's look at this. So it is applicable only when the recipient is an individual resident in India, an HUF resident in India, or a firm resident in India. The dividend which we are talking about could be declared, distributed, or paid by a domestic company. When you talk about the meaning of the term dividend, you have to look at section 222, but section 222E, which is loan or an advance which is treated as dividend, is excluded from the purview of this. Right? So if the recipient is falling under this category, the dividend is declared, distributed or paid, then the income in excess of 10 lakh shall be chargeable to tax at 10% on gross basis, which means there will be no deduction for any expenses or allowances. There will be no set off of losses against such income in the hands of the recipient.